Hello, everybody. Welcome to our cryptocurrency workshop. It is titled Exploring the World of Crypto Assets, Gambling, and Gaming. My name is Nick Renault, and I'm the Youth Outreach Worker for the Youth Gambling Awareness Program here in Ottawa. And I deliver these workshops both in English and French, and I'm really excited to get started with you all today. So just to start off with who we are at YGAP, YGAP stands for the Youth Gambling Awareness Program, and we are a program that is gambling neutral. We try to have all our presentations from a neutral perspective, presenting both the positives and the negatives from a balanced perspective so that youth and whoever is joining our workshops are able to adopt whatever harm reduction strategies that we suggest and know the information from both sides. With this balanced perspective, we're able to share the consequences as well as the positives associated to gambling. And then our harm reduction strategies are going to be in place in all of our workshops just to give some advice on how to stay safe, how to limit the risks, and how to make sure that you can enjoy this responsibly and it can still be something fun that you participate in. So just to look at what gambling is, the definition of it for us at YGAP is when you risk something of value and you don't know if you'll win or lose. So this definition will always include wagering of something of value, whether that's money, your favorite piece of jewelry, your favorite t-shirt, your favorite shoes. These can all be wagered, right? For a chance to win something more. So this is going to be the risky element that's part of gambling, where there's only going to be a chance that you win something. There's also the chance that you lose that item of value that you were risking. So today in this workshop, alongside gambling, we're going to discuss the terminology that's necessary to understand cryptocurrency. We're going to talk about crypto investing and trading. We're going to discuss NFTs and how you can participate in gambling with these NFTs, as well as crypto gaming and NFT gaming. And then we're going to share ways to stay safe and some resources that you can look into for more information or to establish some of these harm reduction strategies that we suggest. So just to look at the definition of cryptocurrency, it's a digital currency that doesn't rely on banks to verify its transactions and instead uses a peer-to-peer network, right? So between one person and another. And these are just all the people that are participating in these crypto asset transactions. The network, it refers to a group of computers that store and share the files so that everything can be kept up to date. And it's using cryptography to issue, to verify, and to secure these transactions using coding information to make sure that it stays secure. And every transaction is recorded in a public ledger, which is going to be through the form of a blockchain. And each time there's a transaction, a different transaction, this is going to be added to the ledger or added to the chain, creating a longer blockchain. So some of the popular options that are pretty well known are Ethereum, Bitcoin, and Dogecoin. But there are tons of other cryptocurrencies available. We know that in 2023, it was estimated there were around 9,000 active cryptocurrencies in existence. And they can still pop up every day with some new ones being generated overnight or across a few days, and then potentially gaining popularity later on. But these three are the most well-known cryptocurrencies out there. And I had mentioned the blockchain earlier, and just to give a little bit more information about this is the method that's used to track the transactions between crypto users on the peer-to-peer network, and it automatically keeps a historical record of all the transactions across the network. And these new transactions, like I had mentioned before, are saved in like a block format and then added to an existing chain, which is why they coined it the term blockchain. It's consistently growing, right? Every time there's a transaction, a new block is added, and the chain continues to grow. Crypto wallet is another thing that we need to know about when you are participating in crypto purchase or crypto trading. And this digital wallet is required in order to use crypto assets. So it's a device or a piece of software that can store your crypto assets either associated to the internet, which is what you would call a hot wallet, or not connected to the internet, which you would call a cold wallet. You can choose to use the wallet that's provided on these cryptocurrency service platforms, the trading platforms, I should say, or you can have a separate application, a separate crypto wallet, which you can then store the cryptocurrency that you're purchasing on these websites into the wallet. So our first question is, and this is going to be for the crowd, right? So I really need some of your opinions about this one. And it's investing in crypto is guaranteed to end up as money gained. Do you think this is true or false? And I see most of us in the chat are saying false. And that would be correct, right? It's not always guaranteed that when you invest in a cryptocurrency, the fluctuations are going to go upwards, right? There's the possibility of a downward spiral or a potential loss in the value of cryptocurrency. And there's risks associated to currency conversion and investing in foreign markets that we should be aware of and we'll be able to discuss throughout this workshop. And there's some taxation costs that may not be taken into account that can reduce the gains that you're expecting to get or that you were hoping to get. So if we just look at this chart here, we can see there are some pretty radical changes since Bitcoin had started, right? At 2023, it was $77, and we can see a pretty consistent flow up until 2017, and then it started to spike and then decrease again, and it continues on this path with a radical spike kind of between 2020 and 2021, and then a crash, going back up, and then crash, and now it's still a high valued cryptocurrency, right? Above 30,000, but it still can deal with these fluctuations going downwards. So you can see here in the last 30 days, it went down $3,600, and then in May it's down 100, or sorry, $1,100 compared to previous market points. So another multiple choice question is, in a study conducted between 2015 and 2022, across 95 countries, it was found that blank out of 4 Bitcoin investors lost money during this period. Please just put your answers in the chat. We have 1 in 4, 2 in 4, 3 in 4 out of 4 Bitcoin investors losing money during this period. So these are the options. And I can see in the chat that most of us are going with B, which is not a bad guess, but just still a little bit off, right? Because we know that 3 in 4 Bitcoin investors lost money during the period of 2015 to 2022. And 1 in 3 Canadians would lose money if selling crypto today. So these investments don't, like we had said, they don't guarantee money gain, and it can actually cause quite a few people some losses or some lost money during certain periods. Another question for us is, according to recent online study, fewer Canadians own crypto assets in 2023 than compared to 2022. So do you think this is true or false? And I see some mixed responses in the chat, but we actually know that the answer is true, right? There are less Canadians in 2023 who own crypto compared to 2022. And this could be because of potential controversy related to cryptocurrency, maybe lack of information around it, potentially some people seeing the losses that 3 in 4 Canadians were incurring and decided to opt out of crypto or to be less invested in crypto. And this kind of decreased how many people actually own cryptocurrency in 2023. So the comparison is a drop off of about 3% compared from 2022 to 2023. When we look at the demographic of who owns cryptocurrency in Canada, we know that 54% of crypto owners in Canada are aged between 18 and 34. They tend to be millennials, right, which is the largest group of crypto owners in Canada. Around 32% of millennials own crypto. And these are just some of the features associated to the demographics of who owns crypto in Canada. And I'm looking at the differences between the crypto investing and then traditional stock market investing. We know that crypto isn't backed by hard assets. So the real world production doesn't necessarily generate the value of the cryptocurrency, which is the case for a lot of these companies that you can invest in on the traditional stock market. There's the difference between the accessibility, right? Where as long as you have internet, you can have 24 access from anywhere around the world to cryptocurrency markets or cryptocurrency trading platforms, where the stock market is during specific hours that you can make these exchanges on the stock market. And the fluctuation itself is driven more by speculation and the potential that this cryptocurrency is worth more, and therefore see people investing and then the value going up. Whereas the fluctuations in terms of investments for stock markets are more affected by a company's performance, where speculation and the amounts of investment might drive up the price. The company's success can determine the value of its stock as well. And then just the difference between the regulation is that crypto isn't regulated versus the stock market being heavily regulated. And so this can change over time, right? With cryptocurrency, the market maturing and becoming more popular, it's possible that there's going to be some more changes and even more similarities between the two investment options. But there are still some risks that we need to know, right? Despite these similarities and the differences, there are some risks associated to crypto trading and investment that we should be aware of before we go in to this realm or into this industry. So it's important to know that cryptocurrency isn't recognized as a legal tender in Canada because of the anonymous nature, making it very susceptible to scams, hacking, and cybercrime. It's just important to know that there's no recourse if you do get scammed or if you're experiencing losses. There's no sort of insurance around cryptocurrency yet today. There's a lot of deceptive ads and misleads about certain cryptocurrency, which might be the next best thing, but truly it's just another one like the rest, right? And it's relying on other people's investments to drive up the value. And it's hard to predict because of the high volatility, because of the changes and the fluctuations that are very unpredictable, not associated to production. It's hard to deem this profitable investment and worth the risk. With 39% of Canadians aged 18 to 34 seeing it as a profitable investment and worth the risk because they might not be aware of this high volatility and how it can change so rapidly. So these 39% of younger Canadians are going into it without considering certain risks or being aware of the scams and the potential hacking that could take place as well. And according to the Canadian Anti-Fraud Center, Canadians reported about $300 million dollars of lost investments because of investment fraud in 2022 compared to 164 million in 2021, just the year before. Well, I won't say nearly doubled, but it grew exponentially, right, from 2021 to 2022. And these are just some of the risks that we would like people to be aware of if they decide to participate in cryptocurrency trading. And so if we just open up the floor to this question, we consider this whether it can be considered gambling or not, right? These are some of the questions that we would like to ask. And we've gotten some responses, and there's been some responses across different individuals in different group settings where you can have the yes side, right? Because of the volatility and the element of chance that's involved, which we saw as part of our definition earlier in the presentation, that this is up to chance, right? There's an uncertain investment that has some high risks that we've also discussed. And so this is why some people would categorize this as gambling. But then on the other side, there are some who say no, right? Because it's investment and having a product, even if there's a fluctuation in value, you're still investing in that product, right? That's the whole point of putting money into cryptocurrency or into your stock market investment, excuse me, is to ensure or to have a potential of gains. So you're not expecting 100% that it goes up, but that is what we would be hoping for when we're investing. And there's a mitigated risk, right? Because the odds aren't always against us, as the case is for a lot of casino games where there is a house edge, right? Where the game is putting more chances to lose compared to chances of winning. And then this one, there's a mitigated risk since the odds aren't against us, right? We are taking a chance, but we are aware that it's potentially going up, not guaranteed to go up, and the risk isn't set up for the stock that we invested in to fail or to be hard to see certain investments. It might be difficult depending on the product or the company that you might be investing in or the cryptocurrency that you might be investing in. But the fact that it's a mitigated risk and the odds aren't against you, such as casino games, makes a very big difference in terms of how people consider this to be gambling or not. And so, regardless of these different perspectives, whether it is gambling or whether it is not gambling, it is much riskier than traditional investment, right? So, the reasons are because of extreme volatility, the lack of regulation, the susceptibility to scams, the little intrinsic value, and long-term uncertainty. All these kind of play a part in making this type of investing very risky, right? So we got to just be aware that after investing, there could be some radical fluctuations downwards or upwards. Both are possibilities, but being aware of both can help us mitigate those risks associated to problem gambling. And then the lack of regulation is another concern, since if you do get scammed, if you do lose certain investments through foul play or ineffective platforms, you wouldn't be able to necessarily get it back because it's not insured and there's no regulations around it. You're also very susceptible to scams, since there could be fake crypto options out there just requesting your bank information. As we've seen, many Canadians had an increase in how much, or sorry, Canadians overall had a greater amount of money lost to investment frauds than in 2021. And there's long-term uncertainty of if your cryptocurrency is going to stay alive or if it will crash shortly after your investment or even a few months or long term after your investment. And it's important to know the relationship between problem gambling and cryptocurrency trading, right? So the association between the two, and we have certain statistics that show here certain findings that have discussed this specific topic. And we know that frequent cryptocurrency trading and spending time constantly checking prices is found to be linked to problem gambling. So this daily speculation or day trading is associated and linked to problem gambling. Cryptocurrency traders are more likely to take out instant loans and to engage in loss chasing, right? In order to gain back the losses that are caused by volatility or just a crash in the cryptocurrency that you were hoping was going to go up. People are more enticed, crypto traders, I should say, are more enticed to take out instant loans to try to get back these losses. And we'll just talk about this one video, right, where we can see how top influencers are involved in this cryptocurrency market, whether it's your favorite YouTuber, your favorite celebrity. They can be involved in encouraging people to participate in these cryptocurrency investments, following which they might sell their own shares or sell their own cryptocurrency and see tremendous gains, right? And so the crypto influencer market has actually gone up quite a bit, and crypto marketers have used social media influencers to boost the adoption of their specific cryptos, and they've actually used celebrities as well. For those who might have seen a Matt Damon commercial promoting crypto.com. Reese Witherspoon as well, I believe, encouraged people to participate in one of the cryptocurrency options or cryptocurrency coins. And influencers, they don't always know the credibility of the products, right? So they might have been paid to promote a certain product or a certain cryptocurrency. And since they've been paid, they may as well do it. They've already gotten a gain from it. So they share the message, and it might not be the best product to share. And sometimes it can actually be fraudulent enterprises, right? This can take place as well. And so we just have a question related to this, a true or false question. And that's going to be, is cryptocurrency promotion on social media causes market fluctuation? So we have options true or false. So just put your response in the chat if you think that cryptocurrency promotion on social media causes market fluctuations. And I see a couple people have said false, a couple people have said true, and we would actually say that this is true, right? We know that mentions of cryptocurrency in tweets, they're associated with a 1.883% return in the first day and 19% loss after 3 months. So it might work right away. It might get people invested instantly as soon as they see this commercial, but over time, we can see a loss in value of that cryptocurrency. And as we turn over to NFTs, which is another type of digital asset, but is built using the same kind of programming, right? The blockchain used for cryptocurrency to make sure that everything is being registered, everything is being saved, all the transactions are added to this public ledger. But they are non-replaceable, right? So there is only one. And these can be used in games, virtual worlds, it can be art pieces, it can be different music, it can be photography, all can be forms of NFTs. Essays as well. So here's just an example of an NFT where it's just a collection of digital, it's this one to the right here, and it's just a collection of 5,000 digital images. It's like a collage, right? Made by Mike Winkleman, purchased by Vignesh Sandarusan. And one of the images of these 5,000 different collage images is this giant space donut right here, right? So this is just one of the ones comprising this whole collage. And this was actually valued quite highly. And I'm just curious as to how much you think this NFT sold for. Some people are saying $1,000, some people are saying 200, someone said $200,000, and someone said 1 million, right? So not that close, right? But still some high numbers. And yes, this did sell for $69.3 million. So very expensive. And this is essentially valued at this much because somebody deemed it to be this valuable. And that's why this purchase went through, because someone was willing to pay $69.3 million for this every day, the first 5,000 days collage. And it's not only just a matter of collecting these items, you can also use them in NFT games and crypto casinos for esports betting, for traditional sports betting, for those platforms that accept it, and for betting on the crypto market fluctuations. So you can actually bet on the next Bitcoin crash or the next Bitcoin raise, Ethereum fluctuations as well, in order to see if you can't wager and have a chance to win a reward following this wager. Like I just said, it can be as the wager. You can win more NFTs, more cryptocurrency from winning this wager. It could be a payout in the form of NFT or a prize as a specific NFT as well. So these NFTs are built in and used popularly in these Web3 games, which tend to include cryptos or NFTs. And so in these games, players can trade in-game assets, whether it's virtual currency, XP, different weapons, different avatars, different items, different perks for real world money or other digital assets. So you can exchange these things and take out money and put it into your bank account. These players have ownership over the digital assets in their games, and it can be used across different platforms, right? It can be used outside the game as well. If you're winning an NFT in a game, then you could take it out and use it for the NFT gambling, like we had discussed, or try to just exchange that for currency as well. And the in-play to earn games can be earned by regular gameplay. So you don't necessarily need to buy items, but you can earn these items worth currency, worth actual money by just participating more and more and passing different levels in these different games. And then there's also GameFi, which is a subcategory of Web3 gaming that combines gaming and finances as per GameFi. And these games are offering economic incentives to play them and to play these play to earn games. So more often than not, these in-game assets are going to be in-game cryptos or NFTs that you can change and exchange outside of the game or in the marketplace in the game. And then a lot of these games will have popular activities like creating, selling, or trading virtual assets. So you can make your own and then see how much it's valued at, and then try to exchange this on the platform. Or you could use a digital asset to participate in some in-gaming activities. So once you get the crypto thing, cryptocurrency, excuse me, crypto token, then you can participate in these in-game activities. So as we look through some of the differences between traditional games and NFT games, it's important to note that there is a difference in the technology and control, right? Where NFT games are are built using the blockchain, excuse me, and then traditional games don't rely on that, right? You can just play on your Xbox. You don't need a blockchain, and you don't need to have this peer-to-peer network. And then the ownership of assets is also different because in NFT, in-game items provide players the chance to complete ownership and control over their assets, since they're independent of the game, right? So you can be brought out of the game, brought into the game, whereas some of the virtual skins in these traditional games are exclusively available in Apex Legends or Call of Duty or whichever one it may be. And then there's the play to earn options and then pay to play, excuse me. So as you play these NFT games, they allow you to earn more currency, more rewards by playing. And then traditional games, they rely on you buying one of the items, buying one of the loot boxes to try to get some of these items. And then cross-platform use, the NFTs can be traded across different platforms. It doesn't need to stay on that one single game. You can take it out, use it in a different game. And then traditional games tend to be platform specific, right? So there are very few, but there aren't many mobile games that are also available on Xbox. Sometimes there are Sony exclusive games that can only be played on PlayStation. There is potentially cross-platform for online play, but the traditional campaign is going to be on your device, on your console. The monetization opportunities are going to be different as well, since you can monetize the cryptocurrency assets that you gain in these NFT games. You can sell the NFTs, right, for different value, different monetization values, monetization opportunities. And this is not the case for traditional games, where once you get the skin in the game, you're using it on your character. Community and governance, right? So NFT games involve more community participation and are decentralized from governance, since there's no overarching body that's in charge of the regulations of those games. But there is a committee that can ban players on traditional games. There are certain guidelines that you need to adhere to if you want to participate online. And if you pass those guidelines, then they're able to ban you and take you off of the server. So these are just a couple examples of popular GameFi games. And so Axie Infinity is an option, which resembles a lot like Pokemon. CryptoKitties is one of the first pay-to-earn crypto games that allowed you to breed and make your own cats, and then you would have to sell them on the marketplace. Gods Unchanged is in the digital trading card game with similar pay-to-earn elements where you can win your own NFT, win your own trading cards, and then try to either sell them or exchange them for higher valued items. And just going into a little bit more details about CryptoKitties, which is one of the first popular NFT games, first popular versions of NFTs. And it's a blockchain-based game started in 2017, which is essentially based on purchasing these cats, combining these cats through what the game calls breeding, and then selling whatever digital kitten comes out from this breeding of other two cat tokens. So you can make specific and unique NFTs that are going to be made into the games and then sell as well on this CryptoKitty exchange platform for a chance to gain crypto tokens or cryptocurrency and increase your profile. So some of the potential risks of GameFi is the fact that there are uncertain regulations around them. So taking the money out, it could be stopped and then you wouldn't be able to claim it just because of a lack of regulations, right? And the value fluctuations continues, right? The volatility is something that you need to be aware of. If you are risking certain cryptocurrencies in the game, it could be worth less by the end of the day. It could be worth more as well. So that's something you need to be aware of when you are risking this cryptocurrency. There's poor gaming experience and low adoption rates, so you might get into it early, put in a bunch of money, but it might not be the best game for you, and you've only realized that after investing a certain amount of currency into that game to try to make it more pleasurable, make it more enjoyable for yourself. There's also the risk of sending tokens to the wrong wallet. So if you don't know your code perfectly and then the game asks, where do we send it? And you put in the wrong token, you can't reclaim that. Once again, because there's no regulation, there's no insurance around the tokens that you're using or the wallet that you're using. And so if you send it to the wrong place, it's going to be gone unless you can make that person agree to sending it back to you. But there's not necessarily any incentive for them to do that. And there's also the risk of scams and hacks, as we've talked about with cryptocurrency. We don't know which, or it's important to make sure that you know which ones are accurate, which ones are credible, and which ones you should probably avoid. And so these games can be considered gambling, right? If there's a payment of money or crypto assets is required before any in-game activity, if the outcome of the in-game activity is at least partially due to chance and is unknown, so you don't know what you're going to get after you combine two kitties for the crypto kitty example, so this would be leaving it up to chance. And then the in-game tokens, if the in-game tokens can be exchanged for crypto assets, which can be exchanged for real world currency, then we would consider these three criteria to make this game gambling. Just another question for all the participants, and this is what is the most common reason given for buying cryptocurrency? So why do people get into cryptocurrency? Do you think it's A, to be able to tell others you own crypto, B, because of speculative investment or gambling, C, notable influencers have promoted it, or D, to make more money than if you put money in a savings account? So there are a couple different answers in the chat, and the answer we're going with is B, right? The most common reason people buy crypto, or the most common reason people give for buying crypto, is because of speculative investment or gambling. So they want to get this risk-taking activity. They want to participate in this chance-based investment to try to get more money from their risk or their gamble. And so if we just look at these other activities here, some of the reasons why, we see number 28%. So that's number one, like we had just said, is because of speculative investment and to gamble. 22% say to make more money than if they put money in a savings account, right? So we're hoping that this kind of goes up for us. Some people do it as a long-term buy, hold investment given their belief in the value of cryptocurrency and technology, right? So it's a personal belief that cryptocurrency is going to go through the roof and is just going to continue to grow. And then there's a couple option other different reasons as well. such as diversifying your portfolio to make more money than through mutual funds or individual stocks, and as an asset whose performance is not correlated with the stock market, right? So it's going to grow on its own through volatility is going to go up through speculation and through the popularity of this cryptocurrency. And so here are just some other reasons, right, that I could just leave up to the board, but we can also see that influencers promoting it can impact whether someone wants to participate or wants to invest in cryptocurrency. Some people do it for fun. Some did it for a bonus offer, reward. Potentially it was a free crypto or a free percentage of a cryptocurrency token. And then some people could be doing it for financial advice as well. So these are just some of the other reasons. I didn't go through them all, but if you wanted to read, they're just going to be up for a few more moments, but these are just some of the reasons why people give for buying into cryptocurrency. And the reasons why people use crypto NFTs and gambling and gaming is once again for the perceived anonymity and privacy associated to these style of gambling, where you don't have necessarily your account right up there. It's your cold wallet, it's your cryptocurrency tokens. And so there is the perceived anonymity and privacy. Because it's decentralized, it's very attractive to a lot of people since there's no mediator, there's nobody in control of the transactions. This could be more intriguing for certain individuals. Then the fact that there's lower transactions fees, it's faster transactions, and the accessibility, like we had discussed earlier, is 24/7, right? Whenever you have internet, you can bypass the gambling regulations and go ahead and have access to your funds right away. To turn profit, right? And for the cross-platform use, so you're not just stuck on one casino. You can go through different ones with this cryptocurrency options, with these cryptocurrency options, I should say. So we just looked at some of the reasons why people participate in crypto and NFT gaming and gambling. And now if we look at some of the risks, we can see that market volatility still remains, right? So we don't, with this fluctuation in the cryptocurrency value, whether it's going up or down, if we were to make a gamble with something worth less or something worth $2, for example, and the next day it's worth $200, we might be very upset and we might chase after these losses to mitigate the volatility and the losses that we just had through gambling. And we also know that people who frequently engage in crypto gambling wager nearly 20 times more than low to moderate online gamblers. And this is because of just how much you can gamble with these cryptocurrency tokens, how much those are worth, and that you're able to do this much faster if you're doing these day trading, right? So those who frequently engage in crypto gambling wager 20 times more than traditional or low to moderate online gamblers. The virtual representation of currency makes it easier to spend more money, right? This is the case with online shopping as well. If you already have your information on Amazon, it's way easier to just go ahead and click and go ahead with any of these purchases. It's hard to identify people who have a problem with gambling and establish safe play guidelines because there's no regulation around it. There's no supervising factor for the crypto gambling. So it's really difficult to establish responsible crypto gambling play policies and guidelines. And it's difficult to reach out for those who are struggling with problems because of the sort of anonymity and privacy. You can't reach out and share anything with those users. And it creates an avenue for youth gambling because a lot of times there's little to no age verification on these cryptocurrency platforms, and even less so on these offshore casino gambling opportunities. There's still regulatory concerns as it goes for all cryptocurrency activities, but the legality and the security concerns, as well as the lack of consumer protections, are things that are quite concerning in terms of cryptocurrency user safety and their private information staying safe. And we know that there's environmental issues associated to the significant amounts of energy that are required to conduct the transactions and the Bitcoin mining and the cryptocurrency mining. So it can cause certain environmental issues. And so now we're into the latter part of our presentation, right? And we're just going to look at some ways to stay safe with cryptos and NFTs. So if you do decide to invest, if you do decide to participate in cryptocurrency, I wish you the best of luck. And I would like you to remember that you should only be spending and investing what you can afford. So don't gamble away with the funds that you need for your responsibilities. Don't invest things that you need for the immediate future, and make sure that you're aware of market volatility, right? So how it can fluctuate, just have those expectations that it can go up, it can go up, or sorry, it can go up and it can go down. Be aware of hacking and fraud and the current scams taking place. So read up on the cryptocurrency that you're thinking of investing in to make sure that not only is it real, but that it's credible and has been able to pay out its users in the past or its cryptocurrency owners in the past. Make sure you keep passwords safe and secure and use two-factor authentications so that you can't get hacked, and don't use common passwords associated to your other accounts, because this is going to be a very big it could be a very big investment profile for you. Use a cold wallet for offline storage just to make sure it's not still on the internet when you're not using it. Learn more about the sites that you use, right? So all the cryptocurrency platforms, the cryptocurrency casinos, the NFT platforms, just make sure you're reading up on their policies, their terms and regulations, and how you can make sure that you are staying safe as you participate with these investments. And just an additional pieces of advice are to diversify investments in terms of cryptocurrency. You don't want to just be all eggs in one basket, because if that basket tends to crash in volatility, like we have said, then we've lost our investments on that cryptocurrency. And then be patient and think in long term. I remember when cryptocurrency was first starting off, or even Bitcoin had just started, just opened up. One of the terms that I would hear a lot is just buy Bitcoin and chill, where you just want to buy it, and then the saying says you just want to chill and wait for that investment to work for itself, right? Wait for those increases in value, and just be patient with this investment. And here are some helpful use resources that you can scan. We'll also be able to share these after the presentation with you all. And so there's just a cryptocurrency investor's guide, which can give you some great advice and some great ideas on how to stay safe, on where to look for your information. There's a national registration to see if your firm, the platform, or the individuals are registered that you're considering working with or investing in. And then we can look at Ontario Securities Commission and learn more about crypto scans here on the bottom right. Just a few more as well. The Canadian Center for Cybersecurity can offer support to individuals, businesses, institutions, and academic institutions about the latest advice, the latest alerts, and just keeping up to date on cybersecurity. And there's a few more additional resources that you can link yourself to if you just scan the QR code. And like I said, we will send these to you after the presentation. And here are some places that you can find support for problem gambling, problem trading, problem gaming, for mental health struggles, and for addiction or substance use. You can connect with Connex Ontario, visit their website, and they'll be able to refer you to services in your area, or they can offer you resources as well on where to learn more and harm reduction strategies. There's also Good to Talk and Kids Help Phone, which are great to reach out to if you need to have a discussion or if you have questions about certain topics. They can link you to other information. And that will be the end of our presentation. So I would just like to thank you all for your participation. Thank you for answering all of the questions that we had today for our cryptocurrency, exploring the world of assets and investments. So yeah, thank you very much for your time, and thank you for joining our workshop today. Have a great day, everybody. And you can expect a link to our evaluation in your email box. Have a great day.